Good morning, Predicted Trades family. Hope everybody's doing well. We had a great day in the room yesterday. For a quick review, we dipped down to test some pre-market lows, and our trend line that pretty much caught this sell-off. We did dip below it a little bit in the after-hours session, but during the cash session, we've tagged it, held it, tapped it one more time, and taken off from it. We got back above the daily 21 a little bit yesterday, closing above it, and we used that as support overnight to keep on pushing up. We're arriving at the daily 8 now, pre-market, dealing with a little bit of a gap up. We do have some economic data that's coming out at 8:30. We've got some PPI, Producer Price Index. And then at 10 a.m. we have our University of Michigan data, some wholesale inventory, and then a little bit of housing data at noon. So let's see how that PPI goes, if we get a reaction that pulls us back down or pushes us even further. And then keep in mind at 10 a.m. that University of Michigan data could cause a pullback if we are remaining bullish and strong after that PPI data drops. And I guess it's worth noting that next week we have CPI on Tuesday and FOMC on Wednesday. So we do have some big data drops next week. But as long as PPI goes okay this morning, it could lead to a rally for today and Monday into that CPI data. And given our structure, it could get very interesting. We are kind of in a wedge from our trend line from high of year and this trend line that just held us up. If I back up a little bit in time, looks like I need to go a little bit further. You know, this trend line was from some near our low of year where we held, and then our last pullback once we started getting over moving averages where we held, and now we've pulled back to that and bounced and coming up on this trend line from highs of year. We also now have a daily squeeze that's starting to form around this wedge. Which basically just means that, you know, once a daily squeeze starts to form, if we're at the bottom of it, it becomes support. If we're near the top of it, it becomes resistance. And it lends to the idea that we could stay in this wedge for a minute, you know, for a number of days until we start to break out to the upside or the downside. The bottom of that squeeze starts right near the highs or the lows that we just held. And overall, you know, basically confirming the range that could start to form a wedge over a number of days. So just something to keep in mind. And it could be that if PPI goes well today and we have CPI FOMC next week, we could make a push up today and Monday to get right back near these highs in the top of this wedge and daily squeeze when we get our CPI and FOMC. Maybe CPI comes out good, and maybe FOMC, they reduce the rate increase amount to 50 base points. Maybe we get two good bits of news that start to shoot us through trend line from high of year and the squeeze top. We're just building momentum for the potential breakup if we get good data, or the breakdown if we get bad. So overall for today, let's go back to our normal time frames. Overall, looking for us to continue up to reclaim this daily 15 at about 4,000. We've arrived at the daily 8 around this 39.86. We have our daily 21 back at 39.67. So wouldn't be surprised if we chop around the daily 8 for a second, we get our PPI data and maybe have a little dip to the 21. But as long as we're holding above the 21 today, the daily 21, which sits at about that 39.67, we'll call it. As long as we can hold up above that today, it's still looking long to continue up to 4,000, maybe even get back to that daily 200 up at 40.40. And let's see, we close kind of around, yeah, basically a 1 ATR could get us up there. We're close enough. But if we pull back and start to lose that daily 21, we could be coming back to retest yesterday's lows and this trend line. Should that start to give out, we'll go retest this week's lows near the bottom of this squeeze. So use that daily 21 as a great line in the sand. That we want to see hold up. If we look over at our MAs, this is a chart I like to check in on every day and drop updates throughout the day. You know, we were bullish coming into this week and above our 45 MAs. This chart over here gives me the 45 EMA from every time frame, intraday, so 4 hour and down. And we were above the 45 MA going into the week. But then we started to slip back in. Monday sent us below the 4 hour 45. Tuesday we rejected them all to head lower. Wednesday we held up in them. Yesterday we started to push back into the higher time frames, and now we're getting back above that 4 hour 45. The bottom of our MAs now sits pretty much right at that daily 21. So same premise, to get going higher, we need to get above these MAs and start to drag all of our, 2 hour, 1 hour, 30 minute, yada yada, up above the 4 hour, which sits up here. And in trying to pull those moving averages up, we could take a dip to visit all of them and then take off higher, closing the day maybe above 4,000 would then pull all of those moving averages above the 4 hour. So that's just talking about the bullish setup, right? If we drop down and start to lose these MAs and then reject them on any retests, then we come back down to test our key levels, which would be just like losing the 21, rejecting it, and then coming back down, right? So pretty simple premise. We really need that daily 21 to be our support on any dips, with the goal of getting back to 4,000. And if we can push past kind of this 40.15 where we were topping out Tuesday overnight, if we can reclaim that, then we have a better shot of getting back to this 40.40 and this daily 200. So yeah, that pretty much covers ES for today. No wonder I'm on the wrong spot. And while I'm waiting on that to load, I'll go back to ES, load up our key levels, and just zoom in a little bit. Yep, to the upside we've got that 39.96, that 4,000, 40.17, 420. If we can get above that and hold, then we can get up to that 200 at 40.40. And if we cannot hold that daily 20, oh, there comes PPI, sending us right down. So today, if we stay down here It's all about 3,900, 3,922. Do they hold? On Wednesday, and I think on Wednesday, what economic data did we have? Over here. On Wednesday, we had a little bit of productivity data. That actually helped us. Yeah, it was basically saying this week when we got down on this drop that it was all about 39.22. We held it on Tuesday's drop. We held it on Wednesday during the cash session, and we started to move up off of it. We're getting this reaction to PPI, which makes me feel better that I didn't swing anything. Yesterday it was all about holding 39.41. We're trying to hold right there now, even though we did wick a little bit lower to that 39.30, where we spent so much time on Wednesday getting support. So 39.22, 30.30, very key. That is support right now. Needs to continue to be support. See us get back above 39.41, yesterday's lows, to push higher. We start to lose that 39.22. It looks more and more likely that we're going to get down to this 3900, where the bottom of this squeeze sits, the bottom of this daily squeeze. And that 38.78 is the top of the CPI gap. So should this reaction actually hold and sellers step in, we will likely come down to test 39.22, maybe not get back over 30.30, fall through 39.22, reject it, and then start coming down to test these levels. But if we can hold up above that 39.22, 39.30, you know, if we take some dips and keep holding and then get back above 39.41, turn it into support, then it's back to the 21.8, yada yada. Always fun when the economic data gives us a little jolt. So we've given up our trend line. We're back at support. Let's see if it remains support, or if selling pressure is just going to be too great that we push right through that support. Much like we saw on Tuesday, where we arrived at some support, but selling pressure was just too strong. We took out what allowed us to bounce Monday and dumped. All right, let's move on to NQ. Let's see where it just landed. From our outer shaded region, pretty much to the cent, down to our lower outer shaded region. On our beast tool. All right. Yeah, NQ, all about that 11,500. If we start to lose that, we're going to revisit these lows and likely test this daily 50 down at the bottom of this daily squeeze. Yeah, we've got a daily Keltner, daily 50, right around that 11,400. So if we start to lose 500, we could come down to test that. And if we start to lose this daily 50 and this week's lows and that 400, we could be talking about coming down. My next big key target is 11,200 to the downside, but this big, thick daily squeeze, daily 50, daily Keltner, should be providing enough support to keep us from tanking. And we can see we're already wicking back up above where we were settling yesterday, so this could just be a reaction and a chance for them to get back in calls cheaper. If we can get going back above 650, where the daily 21 sits, you know, we've got our daily 8, daily 15 all stacked here. So as long as we can hold that 500, looking for us to try to rally back up into this zone where all of these daily moving averages sit. And if we can start to push through a pre-market high and hold that 750, then trying to push back up to reclaim Tuesday at least to that 850, and maybe even Monday back up to that 12,000 where we closed. Yeah, a very strong full ATR today would get us there. Obviously, we're going to be dealing with a gap down now. But definitely keep an eye on, was this an hourly squeeze? Even though we slipped outside, it looks like we're going to try to open around there. Maybe we hold there. And you'd also be watching Wednesday's highs, yesterday's lows, midday. Right at around that 580 to 550-ish. Moving on, ready. Dropping a little harder than the rest, setting a new low on the week. Right at that 1800 daily squeeze bottom and daily 50. So let's just see if it can continue to hold there with the goal of trying to get back to that 1820, 1830, and maybe move up into these moving averages more. Daily 21 around that 1837. If we start to give out, 1800. Bottom of that squeeze is at 1780, so we could still reach down there, come back up, and technically be holding the bottom of this daily squeeze below that 1780, looking like 1754, 1760, if we do break down. YM. Today it's all about the 33,500, this daily 21. Almost slapped that 500 on that drop. Now we're trying to hold the 21. We start to lose the 21 and reject it during the cash session, likely coming down to test this 33,500 in this week's low. If we slip below that, we've got this daily squeeze starting down at 33,200-ish. And that big psych level of 33,000 setting below if we do start to give out this week's lows and head lower. But if we can hold the 21, looking to get back up to this 34,000 and then try to push and close above. And hopefully you guys don't think I'm crazy for thinking upside. I mean, if you remember, we've had some data releases this fall where it tanks pre-market and then rallies to new highs. We've had some where it tanks and then it goes and breaks new lows. So we'll just have to see what we get if they hold these key levels, if there is a snap back to try to fill the gap. And then if we reject and hold and set higher lows, we'll go past filling the gap. It's just simple, gap fill rules, simple price action reading with key levels. We have to see if they support and buy from here, get to fill the gap, and then start buying higher off that 39.53, 39.61, yada yada. Apple. Let's see, it's all about 142, 141. As long as we can hold above those today on Apple, looking to get back up to this 144, 145, where we were on our way to get to, where that daily 8 and daily 50 now overlap. But if we start to lose 141, going to test 140 and come down to our zone below at 138, where that daily squeeze bottom is sitting. AMD. Definitely not as strong a day as Nvidia had yesterday. It was about to open near the highs, now back down near the lows, and a bunch of stack squeezes. So let's just see if we can stay above 69 on AMD, 69.70, the zone of support, with the goal of getting back up to 71.72, that daily 21, daily 8. Amazon. Coming back down near the lows. All about 88, 89 today, as long as we can hold there, start to push back above. Goal is to get back to 90 and 91. If we can actually push higher, 93 where that daily 15 sits. The 21 still above. If we start to lose that 88, coming down to test this week's lows, 87 and 86. BA. Nice strong day yesterday. Back up to the top of a daily squeeze. It's all about that daily 8 and yesterday's lows from about 178.5 up to 179. That should be support today. Go long off that. If we start to give that out, then it's back to 176, 175, this week's lows. If we can hold, looking to get back to 182, 185, and yesterday's high. Cat. All about 228, 229, as long as we can hold there. We can try to get back up to this 232 where the daily 8 sits, 233.5 where the daily 15 sits. If we start to give out that 228, coming back to test 225 likely in the bottom of this daily squeeze. Google was very weak yesterday compared to the market. Actually looks like the opposite of the market. The market moved up and then kept pushing against that ceiling. Google just fell and then stayed near its floor, wicking down to that 92, but then back up to this key level at 93.4. If we can't hold 93, 93.4 and try to push back to 95, start to give out 93, we are falling back to this 92, 91.5 zone below. Oh, well, sorry, I guess I skipped GS, Finance. Still being held down by these trend lines. Let's see if 355, 356 can support a move back to 360, 362, which would be getting us through these trend lines and allow us to move back up to 365. If we start to give out 355, likely coming down to 350, 347, 345, where that daily 50 sits. That's also third Keltner down. So that'll be a big zone of support if we get down there, and a great spot for it to bounce. But we could still just hold up this 355, start to reverse over 360, and make our way back up to the moving averages above. Meta, looking a little better than Google, which is very sad to say. Google should always do better than Meta. It's all about this 113.5, 114, see if it can hold today, with the goal of trying to get back up to 118, where that daily 50 sits. We are right in between our daily 21 and daily 8 as well, so it could just stay in that liquidity pocket. If we start to give out 113.5, going to test this week's lows at 112.5, and should that give out 110. Microsoft was pretty strong yesterday, and now looking to like it's going to be opening in the same area. Let's see if yesterday's low and this daily 21, kind of equidistant around 244, can hold. Start to bounce us back up to 246, 248, daily 15, daily 8 up there. So it's all about holding these moving averages and trying to push back off of them to 250 and beyond. But if we start to lose that daily 21, that 244 could be coming to test yesterday's low, this week's low, and then arrive back at that 240, 241, and that daily 50, which is now caught up to that recent low. Netflix. Oh, Netflix, you little minx. Last couple of days, been talking about some of those Netflix calls holding their beast, and yesterday they kept holding beast and bouncing. We can see we're having a nice gap up, even that little slip in the market from PPI data Netflix still set to open around 318. Making those 320s that were at Beast yesterday probably going to be a double, maybe a triple near open. With Netflix, if we have a little dip in the market and some profit taking on Netflix, want to see yesterday's highs hold up around 312, 312 and a half. And if we can hold and keep pushing, looking to get back over 320, 323, with the goal of 330 and 333 to fill the old earnings gap. But if the market is not going to rebound, ooh, see, already making that push to 39.53. We might even recover this drop before we open. Let's see, Netflix. If the market starts to slip and Netflix starts to lose yesterday's highs, then likely slipping back to the 310, 307, 305. So definitely keep an eye on the 320s, 325s, maybe even the 330s today if we are going to see a good push on everything. But if market rolls and Netflix can't break over 321, then keep an eye on those 310s, maybe the 305s. And she could be coming back if the market is weak. NVIDIA. Big old day yesterday. From reaching down to about 160, making it all the way up to 170, 172 almost. Having a little gap down with the market, but trying to hold up 170 and that high around 169. So 169, 170, zone of support. Let's see if it can hold. If it can't, likely coming back to where we bounced at 166.5. But if we can hold up here at this 169, 170, looking forward to get back above 172, clear pre-market high, with the goal of getting back to 175.5, 176, where the daily 200 top of the daily squeeze sits, if we can get a day 2 on NVIDIA. QQQ. Yep, all about 281, 282. Need that to be support today. If we slip into it, that's okay, as long as we get back above 282 and start to push, with the goal of trying to get back to 284 where the daily 21 sits, 285 where the daily 8 sits, and where we just were pre-market. And if we can clear pre-market highs, back to 288. But if we start to lose 282 and then 281, coming to test 280, 278 this week's lows, and 277 where the daily 50 sits. SPX. Had that gap up yesterday, pretty much came back and filled the gap. Also a good spot where we went long. And then flagged. Looks like we're going to be dealing with a small little 17-point gap down. You know, we were pushing like a 30-point gap up, and now we're only 17 down. Not so bad. So we're going to be opening a little bit below 39.50 or around it. Let's just basically see if that 39.36, where we pulled down to fill the gap, can continue to be support. If we start to lose it, come down to test 39.20, 18, and then 39.00. But if we can get a good hold and get back above 39.50, 39.60, where the daily 21 sits, looking forward to make that move back to 4,000 and beyond. Pretty much like ES on SPY. Oh, look at that. Wick down to that 392.66 and right back to that 395. Let's see if 394.5, where we bounced late day, 395, can be the support that starts to reverse this back up to pre-market highs. Got key levels here to take out, the same ones we were messing around yesterday. I mean, in fact, we're about to open pretty much in the same spot. So it's kind of the same premise. If we start to lose at 395, 395 and a half, coming back to test this 393 and a half, 392.66. Should that give out, coming to 391 this week's lows, and maybe that 390 big key level on SPY. Tesla. Overall, you know, been weak and held down below this trend line. Started to break through pre-market, coming back for a test. Let's see if it can hold 172 and this trend line and start to push back up to try to get to 180. But if we start to lose at 172, coming back to 170, 169, and then my zone below at 166, 167 and a half. UVXY. From that 7.5 getting back up, if we're going to see further downside in the market today, we'll likely see UVXY hold above 7.5, try to push its way back to this pre-market high at 7.8 and push further up to 8. But if the market can rebound, I'd like to see UVXY stay under 7.7, get below 7.5, back on the trajectory it was on, and continue that journey down to, 7.3, 7.2. In VIX. We did a good job getting below 22.5 and then rejecting it to close below. We had a little gap up already, and now we're pushing back to 23. So if we're going to see more downside in the market today, we'll likely see VIX stay above that 22.5, push up to 23, 23.33, and then try to push past to 24, 24.5 if we were to truly break down today. If we reject 23.33 and stay below 23, then we'll likely stay in range today. And if we can reject 23, get below 22.5, it could start to look more like a push back to the upside, which we should then see VIX get back down to 22, this daily 8, and maybe even 21.5 where that daily 15 sits. So if we can rebound today and get right back up to keep pushing, we need to see VIX get back below 22.5, 22, and get to these daily moving averages. So that's it for prep today. Hopefully this was helpful for everybody. Thanks for tuning in, and we'll see everybody in the chat. Oh, and just a quick reminder, it's a Friday, time to size down, play with profits, have fun. Don't try and make or break, don't try to make your week on a Friday, because you usually can end up breaking your week on a Friday. No fun going into the weekend on a salty note. So I always like to try to remind folks, size down, have fun. We trade heavier early in the week, and Fridays are just kind of playing with profits, in my opinion. That's what I like to do. But good luck today, everybody, and we'll see you in the chat.